Right, let's talk about India now. And the Reserve Bank of India has today announced liquidity measures for banks and NBFCs. Now, the central bank has forecast a 7.4% GDP growth for India in the next financial year, that is 2021. RBI has also slashed reverse repo rate by 25 basis points, bringing it down to 3.75% from 4%. Reverse repo rate is the rate at which the central bank borrows money from other banks. The RBI also expects inflation to decline further and settle below 4% by the second half of the current financial year.
India is expected to post a sharp turnaround and resume its pre-COVID, pre-slowdown trajectory by growing at 7.4% in 2021-22.
In addition to this, to the 50,000 crore rupees of special refinance facilities have also been announced for National Bank for Agriculture and Rural Development, Small Industries Development Bank of India and the National Housing Bank. This so as to enable them to meet sectoral credit needs. This was the second such announcement from the RBI since the lockdown began on March 25th. The RBI also said that contraction in exports in March this year at 34.6% turned out to be much more severe than during the global financial crisis, but the level of forex exchange reserves continue to be robust, and the central bank also said that it is monitoring evolving situation continuously and will use all its tools to deal with the pandemic.
India is among the handful of countries that is projected to cling on somewhat tenuously to positive growth at 1.9%. In fact, this is the highest growth rate among the G20 economies as estimated by the IMF. Since March 27, 2020, when I spoke to you last, the macroeconomic and financial landscape has deteriorated precipitously in some areas, but light still shines through bravely in some others. On April 14, the IMF released its global growth projections, revealing that in 2020, global economy is expected to plunge into the worst recession since the Great Depression, far worse than what had happened during the global financial crisis. The IMF's economic counselor has named it the Great Lockdown, estimating the cumulative loss to global GDP over 2020 and 21 at around $9 trillion, which is greater than the economies of Japan and Germany combined.